This is the FJMS Tech Company earnings call report for the year 10 data available. We will be looking at some performance metrics, and we'll be talking about our strategy going ahead as well as where we're going to focus on improvement. We'll get started talking about our performance in the last year as compared to the investor expectations. To begin by talking about FJMS Tech's current strategy, we operate using a diversification strategy that mainly focuses on adding features to our products, both the AC camera and the drone, and then using that to sell them for prices above market average. It is a marketing strategy, diversification marketing, that puts a high level of resources into marketing, so we are often spending more than the industry average. But because of this strategy, as the numbers show, we have now stabilized and are starting to grow because we are now able to charge more for our products, and we have an adequate amount of market share in each of the regions. But now we're going to begin focusing on improving our image rating, mainly by manipulating the PQ ratings, and further stabilizing our credit rating and rate of ROE growth that we're experiencing here. We would like to stabilize those to a point where we feel comfortable that they will continue improving as they have right now. If you look to the table, you'll see highlighted in green our EPS growth and stock price gains. These are both areas where we have consistently come in above the performance targets and the investor expectations for that year. You'll see that they are both 20% or higher, and we're seeing a stable growth in both of those areas. So what we will be focusing on are the areas highlighted in yellow and red. These are areas that we are either, the ones in yellow, coming in at marginally above the performance targets and are going to be putting a lot of resources in trying to get those to a point where we think they're stable. And then image rating being the only area where we are coming in below our performance targets, and we will be focusing a lot of our metrics for this year will be focused on improving that score. If you look at our focus metrics, you'll see highlighted here in red with the arrows are the areas that we will mainly be focusing on. Chiefly image rating, to see if we can start coming in at least at or above the performance targets set for the year. So to improve that, we'll be focusing on manipulating our product PQ ratings by intensifying our diversification strategy to add value to our products, whether this be by adding more features or adding a more robust marketing plan to regions where we can try to capitalize on some market share that we're missing there for our image rating. We will be focusing on diversifying our market efforts to gain a more global market, whether that means taking money from markets that we already have a pretty sizable market share in and putting some of those funds into developing market share in regions that we haven't focused on as much. Or also it could be just to stabilize our ROE growth, to spread our net a little bit wider and make sure that we're getting all of the value out of the markets as we possibly can.
Our key performance indicators, we are boiling them down to 3 parts: our advertising budget, our investor expectation score, and our earnings per share. We believe that a key part to our success and to our performance was the fact that our advertising budget and the efforts that we have made to really make sure that we are differentiating ourselves in our markets. The other reason that we are making sure that our performance is high is with our investor expectation score. For this year, we really made sure to hit that mark in making sure that we were getting the investor expectation score. So that was something that really helped our performance as well as our earnings per share. That it's something that we had set ourselves a goal to make sure that we were increasing our earnings per share. And that's something as well that we were able to hit for this year. Some of the future improved IE metrics that we really want to focus on is our PQ rating, plus our more global market share. For our global market share, we really want to focus on our Europe, Africa, and Asia Pacific market shares, since these two are the two that are below average according to our geographic operating benchmarks, specifically the UAV drone benchmarks. Our PQ rating currently is below average, but we will be creating more value for our customers by increasing the quality of our products. This is one that as well we will be focusing more for future improvement of our IE metrics.
Okay, thank you. Now I'm going to discuss our projections for year 11 and the actions we will take in order to achieve our goal. In the coming year, we expect our EPS, image rating, and credit rating will meet our investors' expectations. Our EPS currently stands at 6.64 and we expected this to meet our investors' expectations of 7.8 in the coming year. Image rating is expected to reach 70 or higher next year from 69 this year. For the credit rating, we are currently at A and we expect it to achieve A plus in the coming year. The current problem of our company is that most of our revenue come from North America and Europe Africa markets. When it comes to other regions, especially revenue of UAV in Asia Pacific region, is still lower than expected, which hurts our total profit and it drags down our ROE. That's why we are designated to the following three actions to ensure our performance meets expectations for the coming year. First, we will buy back stock to keep our stock price rising. It helps to improve our ROE to meet the investors' expectations. And study shows that this will also improve consumers' confidence, uh, consumptions, and public buying. Second, we will further improve both AC camera and UAV quality to improve the PQ rating without increasing the price of our product. This helps us to build a better brand image and reputation. Third, we plan to increase the budget on search engine advertising and retailer recruitment in Asia Pacific UAV market. We find that companies' investment in the above two projects is much more lower than the other regions, which may be a part of reason for this low revenue outcome. So we are confident that this adjustment will improve the phenomenon in the coming year. That's the end of our presentation. Thank you.